Constellation Brands stock price is down, and today at Insightful Value, we are taking a closer look at why. Before we start, remember this review is for informational and educational purposes only, not financial advice. If you enjoy these kinds of deep dives, make sure to subscribe to the channel, hit the like button, and drop your thoughts in the comments below. At Insightful Value, we provide clear analysis of undervalued companies without the jargon, making investing concepts simple and actionable. More information about this and many other companies can be found at insightfulvalue.com. Now let's talk about Constellation Brands. The company is one of the largest producers and marketers of beer, wine, and spirits in the world. Its portfolio includes well-known names such as Corona, Modelo, Pacifico, Svedka Vodka, and Robert Mondavi wines. In fact, Constellation holds a strong position in the United States beer market through its exclusive rights to Mexican imports like Modelo and Corona, which continue to grow in popularity. Recently, the company has been facing a mix of strong demand and rising costs. In its latest earnings report, Constellation showed revenue growth supported by the continued strength of its beer segment. However, margins have been under pressure from higher input costs, logistics, and marketing expenses. Earnings per share came in softer than expected, which disappointed the market and added pressure to the stock. Dividends have been rising modestly over the past years, but management has balanced that with aggressive share buybacks, preferring capital returns through both dividends and repurchases. This combination has created value for long-term shareholders, though the dividend yield itself is not particularly high. Why is the stock down now? The main reasons are investor concerns about slowing growth in wine and spirits, higher costs affecting margins, and the company's large investment in Canopy Growth, a cannabis company, which has not yet delivered meaningful returns. Some investors see this exposure as a distraction, while others believe it could be a long-term opportunity once the cannabis market stabilizes. From a value perspective, Constellation is still profitable, has strong cash flows from its beer segment, and is committed to returning capital to shareholders. But risks include dependency on a few key brands, fluctuating consumer preferences, and potential regulatory changes, especially around alcohol and cannabis. Should you invest now? From one angle, the stock pullback could present an opportunity for value-focused investors who believe in the long-term strength of Corona and Modelo brands. On the other hand, cautious investors may be worried about shrinking margins and uncertain results from the cannabis bet. Whether the stock recovers soon depends largely on how effectively Constellation can manage costs, improve profitability in its wine and spirits division, and whether beer demand keeps growing as strongly as it has. For conservative investors, patience may be required to see if the current valuation truly reflects these risks. If you would like us to create a review of a company of your choice, we charge only $20 per review. You can reach us at info@insightfulvalue.com. Remember, at Insightful Value, we break down the data and explain why companies might be worth considering without unnecessary complexity. More information about Constellation Brands and many other companies can be found on our website, insightfulvalue.com. Make sure you subscribe to our channel for more reviews, like this video if you found it useful, and leave a comment with your opinion about Constellation Brands.